Crude back to 45 and change. I got to go back to March for that. Interesting piece in the Journal this morning. They get a look at some internal documents at ExxonMobil, David, planning documents, and their general expectation is that oil prices will fall by 11 to 17% in each of the next 7 years, as renewables and EVs obviously become more of a force. But talk about disconnects, that's not stopping crude from getting back into the high 40s.
Well, interestingly, speaking of disconnects as well, there is a belief that under a Biden administration, it will become more difficult to do new drilling. So whatever you got going on is fine, but don't expect to potentially be doing new stuff. And that could result in not shortages, but in supply constraints to a certain extent, or at least the market not being as flooded as it has been, Carl, which would result in the price going up, which we've been seeing over the last few sessions. So things cut both ways. Of course, we do talk about the EV revolution often. That's what we started the show with, watching Tesla's market cap eclipse $500 billion. But, of course, as a percent of automobiles on the road right now, it is extraordinarily small. It is going to grow. It is eventually going to become an issue. But we talked to Mike Wirth about it from Chevron last week, making the point, of course, you have to. It's part of their talking points at this point that I think it only represents 25% of their total in terms of at least what's used actually of the product they're getting out of the ground in an automobile, Carl. But we're keeping a close eye on ExxonMobil for any number of reasons, including, of course, that dividend, the yield of which is very high right now for the company, but which continues to be at least a question mark in terms of their capital allocation.
Indeed. And then we'll talk more about what Nikola told Kramer last night. Mike, I see Citi takes Fisker to buy, a pretty thinly covered name, but they go to 26, implies 60% upside. And then Jonas over at Morgan Stanley today cuts Ford to equal weight on what he's calling EV transition headwinds. So there's going to be a lot of chop in this space over the next few quarters and years.
There's no doubt about it. I don't know, what basis you're raising the Fisker price target, but if you're looking at some comps, whether they be the Chinese EV companies or not, everything's being marched higher. It is ironic. The market is not really willing, and this is often the case with any industry, willing to look at, an integrated kind of old economy with some new economy stuff growing within it like Ford and try to assign the value to the new business at anything like what the pure plays are running for. We get that. Although maybe, David, the exception to this right now is Disney, which is back at the old highs in terms of its share price, with theme parks mostly closed and basically people giving apparently a Netflix-type multiple to Disney Plus subs.
Shepard Smith here. Thanks for watching CNBC on YouTube.